All right, ladies and gentlemen, welcome back to the channel. Jack Graham here, Realtor with Simply Vegas in the Las Vegas Valley. Today, I'm talking about what the Federal Reserve just did today. They came out and they talked about interest rates, which have a big influence on the housing market. Prices. So we're going to go over what they said. I'm going to show you a quick clip of the section with one of the reporters asking a question to the Federal Reserve, about what's happening with interest rates, what they want to do with the housing market. And the reason why I'm covering this is because they have a big influence on interest rates, right? They are the ones that kind of regulate what the baseline of the interest rates are. And as a consequence, they influence the housing market, as far as interest rates goes. After that, I'm going to give you a quick market update and then we're going to wrap it up. So let's get into this video. I'm going to start playing that clip for you guys so you can start seeing it. Now, this is for you to pretty much understand a little bit the underlying issue on what's happening in the market, right? Actually, before we get into it, I'm going to show you a little bit the pricing and what's happening with real estate prices. As you can see right here in Las Vegas, we were at 455 at the peak this year. That was around May or so, where now we're down to 415. Yes, 415 median sales price for the average home here in the Las Vegas Valley. So something to consider. We're down 30,000 as far as the average home. And the reason why has been because of these interest rates rising. So they have the Federal Reserve, head chair is his name is Jerome Powell. He's the one that does all the meetings and gives out information on what they plan on doing with rates. So let's see what they said as an answer to this reporter's question.
Thank you, Chairman Powell. Nicole Goodkind, CNN Business. Existing home sales have fallen for 7 months straight. Mortgage rates are at their highest level since 2008. Yet mortgage demand increased this week, and housing prices are still elevated. Now, at the end of your June press conference, you mentioned plans to reset the housing market. I was wondering if you could elaborate on what you mean when you say reset and what you think it will take to actually get there.
Yeah, so that was the question from the lady, and she was talking about reset, right? So they back, I think a few months ago, this guy came out. He said that the housing market needed a reset, and that caused a lot of fear in a lot of sellers, and they started listing homes big time. And we started seeing a spike in amount of listings that came on the market, and because of that, now this reporter asked a really good question. What did you mean about that? So let's see what he says about this.
So when I say reset, I'm not looking at a particular specific set of data or anything. What I'm really saying is that we've had a time of a red hot housing market all over the country where famously houses were selling to the first buyer at 10% above the ask before even seeing the house, that kind of thing. So there was a big imbalance between supply and demand. Housing prices were going up at an unsustainably fast level. So the deceleration in housing prices that we're seeing should help bring sort of prices more closely in line with rents and other housing market fundamentals. And that's a good thing. For the longer term, what we need is supply and demand to get better aligned so that housing prices go up at a reasonable level, at a reasonable pace, and that people can afford houses again. And I think we probably in the housing market have to go through a correction to get back to that place.
All right, so that was big. He said that probably in the housing market, we need to go through a correction to get to a reasonable level. He also mentioned, and which is scary if you think about it. Shoot, what does that mean? In order to get a correction, most likely it's because they're planning on keeping on rising interest rates. I'm gonna show you the 10-year yield, which is shows you the interest rates, what they've done in the last few months. And as you can see, we are right now at 3.5%, 3.55. That's really high compared to, compared to what's been happening in the last what is it, in the last 2 years, right? So in fact, we go out to October, look at where we were with interest rates. It was down to almost zero here, like 1.5. Right now we're at 3.5. That's 2% higher, which causes us to have interest rates at above 6%, like in the low sixes. That's what we have right now on a 30-year mortgage on a house, a little bit above 6%, which is pretty high. And if they keep on raising interest rates like they predict to do, which is today he mentioned most likely will be another 0.75% interest rate hike within the next meeting that they're going to have. This is going to cause more pain in the real estate market because, people are going to be not going to be able to afford a home even more. So I don't know what he was talking about there. That's what really bothers me. There's a lot of politics involved into this, and it's really, really bothering me because he was mentioning, well, we need to bring down affordability for people, which means prices need to go down. Rising interest rates does not bring down affordability. Rising interest rates makes the monthly payment for the average person that buys a home way more expensive. So this is the hypocrisy that they have and the kind of arrogance that they have, thinking that they have control over all of these factors and all this stuff. This is not a matter of rising interest rates and raising the interest rates and it's going to correct the market. No, it's going to make it more difficult for people to afford a home. And the single reason why people are not able to afford a home nowadays is because they printed a lot of money. They printed too much money and they put it into circulation and they bought and they dropped interest rates down to zero, which created flooded the market with buyers, understandably so, and that caused people to go out and purchase a bunch of homes. But what's happening is right now they are kind of blaming the economy or the inflation for their rise in interest rates. But at the end of the day, what bothers me is that they should be blaming themselves for the way they printed a bunch of money and caused all of this inflation to happen. And at the end of the day, you know where all this inflation goes? It goes into the housing market, into homes specifically. And you know what? Rents are not going to go down. Here's why. Because what's the alternative to renting? If the rent is too high, what are people supposed to go? They either become homeless or they buy a house. Guess what? If interest rates are higher, mortgage payments are going to be even higher, which doesn't make any sense, this logic. So really, really big fallacy in what he's saying. I think it's just to cover the reason why they're bringing up interest rates. And they're saying that this is going to crash the market or it's going to cause a correction in the market. Now, I don't know if this is actually going to happen. So far, we have seen a correction. From what I've seen online, it's 10% or less in correction in purchase prices. In the median sales price on homes. So far, we haven't been above 10% correction. And that's from the highs. Year over year, we're still up about 10%. This is here in Las Vegas, by the way. Anyway, let's see what he says after that.
There are also longer run issues though with the housing market. As you know, it's difficult to find lots now close enough to cities and things like that. So builders are having a hard time getting zoning and lots and workers and materials and things like that. But from a sort of business cycle standpoint, this difficult correction should put the housing market back into better balance.
Okay, so he's reiterating right now that this difficult correction, he said, I believe he said something like that, is going to bring the housing market back into balance. It might bring prices down. I don't know how much, but it might bring prices down a little bit. But it's not going to bring things back to normal. It's not going to make housing more affordable for the regular people. It's going to be more expensive. What he's thinking right now is, hey, housing prices are going to have to, correct in order for things to be normal. But even if we had housing prices go down 20%, then we still have mortgage payments are going to be way higher than what it used to be back in January when the market was at its peak, March or so. whenever they started rising interest rates. So, no, yes, they might bring down home prices, but your payment is going to be higher and higher the longer you wait, because at the end of the day, inflation hurts everybody. And the way they're talking about this inflation, call me inflation. Yes, it might correct the market, it might bring it down, but if you buy in the future, you're going to have to pay more money every month unless they change course and they go back down with interest rates. It's not like they've been really reliable so far. They've been saying, oh yeah, we're going to bring down inflation forever. Inflation was transitory, they said, for, at the beginning of the pandemic. They thought, hey, everything is good. In a few months, we won't have any more inflation. And here we are 2 years later, fighting with 9% inflation year over year. That is, so I don't really listen to this guy, but it really bothers me, the arrogance and the hypocrisy in their speech, because they know what they're talking about and they really want to confuse people. What does this mean, however, for you as a buyer and where you stand? Well, it really depends. If you want to try to time the market, you can. You can wait for prices to drop a little more. If they do, we don't know. But here's the thing. The moment they change course, because they said that they're going to change course eventually in the future, and they're going to change the interest rates, maybe going down to an average 2%, that's when you have to rush into the market and get in as soon as possible. That would be your best choice if you're trying to time the market. Now, if you're in it for the long term, right now I see it as a good opportunity to buy the dip that we have in the market, where we have about 6 to 7% correction so far. Maybe 8% if we keep following that trajectory, like up to date, because the data is always backtracked. So we're talking about prices from 1 to 2 months ago, where about 6 to 7% lower than March, but still year over year we're 10% higher. But at the end of the day, you can't really time this perfectly, in my opinion, if you believe that real estate is going to be a good investment, whether it is for you to live in, or as an investment for the long term. Real estate is not something that you trade daily. You shouldn't worry about price fluctuations. If you're happy in the home, especially if it's your first home and you need to buy something to live in, you need to lock in something for 30 years. Because here's the thing, interest rates, I don't know where I read this quote, or someone told me. It was, you date interest rates. I actually was a client today that I met up. You date interest rates, but you marry your price of the house. So what does that mean? If interest rates keep going up, the price of the home might correct a little bit, but then you marry that price. Once you get a mortgage on that home, you are locking in that price. But once interest rates go down, if they do go down, then guess what? You can refinance, and it's kind of like, you're dating. You get the metaphor. But the point is, you shouldn't worry about interest rates that much. You should worry about the purchase price of the home and locking in a 30-year fixed rate mortgage, because worst case scenario, if interest rates go higher, guess what? You're still locked in at that mortgage, at that certain mortgage for 30 years. But guess what? If interest rates go lower, then you can always fluctuate down. You can always float down, but you locked in that price of the house. And guess what's going to happen once interest rates go lower? At some point, they're going to turn around and they're going to bring interest rates lower because they can't afford it, in my opinion, right? But if that's going to happen, prices are going to shoot up, even with higher prices than we have right now in the market, or that we had back in March, way higher, because now people are getting used to a higher payment every month. And once those interest rates go down, they unlock a flood of money that is coming to the market, and it's going to happen quick. So get ready. Meanwhile, I keep buying, steadily as I planned. My plan was to buy one home per year as of, I think it was back in 2019. I started buying one home per year. And so far I'm on track. I'm actually beating it, because I just got another house under contract, which is going to be my second home this year that I'm purchasing, although I sold another one. But the point is, I'm in it for the long term, and to me it doesn't matter. You know what mortgage rate I got on this investment property that I bought? It was 6.125%. Guess what? I know it's expensive, but I'm happy with it. I like it. I'm okay with it. The house is still gonna cash flow because the investment that I'm gonna buy is gonna be an Airbnb. It's gonna bring in money every month, and it's gonna have a positive cash flow every month. And I don't have my money sitting in the bank where it gets devalued with inflation every month. But regardless of this, just want to give you a little bit of update. I want to show you this clip because this is really important, and it might cause a little bit more of a correction in the market, more than I expected. I was thinking about 10%. Right now we're about 6 to 7 is where we're sitting. I might be right. I might be wrong. It might turn tomorrow or in a month or so. It might go down to 10. It might go back to a little bit more than 10. But as soon as we see that inflation going down, in my opinion, which he said today, inflation needs to go down to 2%, right? Then they're going to be slowing down, because that means that's going to slow down the increase in interest rates they're going to have. And that's when we're going to see the bottom in the real estate market before prices start going up again. With that said, I hope you guys enjoyed this video. Let me know down in the comments what your thoughts are about the market, what's going to happen. I hope you stayed until the end. If you did, leave a comment down there in the description, in the comments, and let me know that you stayed until the end. With that said, thanks so much for watching. I'll see you guys on the next video.